Let's go in the short term, first of all, though. And your earnings just a few days ago, blockbuster, the highest ever quarterly profit, 21.2 billion, up 41%. I don't want to put a negative question on it, but can things go on that well?
So, listen, first of all, we build a company for the long run. And obviously you mentioned crises and ups and downs. We're clearly in a very, almost as good as it gets environment for banks, high volumes, high asset prices, a lot of people trading, et cetera. So this can go on for a while. It will eventually end, but it's not how we run the bank. I run the bank, we serve clients, we serve them around the world, we serve them every day, we invest through thick or thin. I remind people, our best year wasn't the year we made the most money. Our best year was the year we had only a 7% return on tangible equity. It was 2008. And that outperformed everybody, and that was our finest moment.
In a relative sense, and I guess setting you up for the long term. And as you say, the current environment, we had, again, good economic data this morning on the retail sales front. The environment for your stock is good, the environment for your company good, the environment for the economy is good. At the same time, do you think the probability of a major risk suddenly arising is a bit higher than, you've been in charge for 20 years. If you took out 2008 and COVID, is the risk, the tail risk, bigger than outside of those moments?
I think, first of all, it's very intelligent to say it was the probability, because we don't know which probability is baked into the market. There's something baked in. I tell people, if you said the market's going to fall 40%, there's only a 10% chance, that's 4%. That's one PE turn. So it's possible something's baked in. What's not baked in is that it actually happened and such. So I do think if you made, and I always do this just as an exercise, make a list of all those really complex, long-term geopolitical tectonic plates, things that can affect the market or may not, and they may mix and match in a certain way you don't understand. So you have wars in Ukraine, terrorism in the Middle East, obviously Iran, great global deficits, remilitarization of the world, America's relationship with China. So there are a lot of things out there which could cause a problem, but again, they might not. I hope they all resolve properly, and that's what most governments want. But I do think those risks are probably bigger than other people think.
You said on the earnings call that the US economy, but the global economy quite impressively shrugged off oil price spikes with Iran, and it was quite resilient in the face of that. That said, fighting has obviously started again. The Strait is obviously shut again. How much do you think of that resilience from March, April, May was because oil stocks were high? And if this current shutting of the Strait persists, might we not be so lucky this time around?
Yeah, I don't think the resiliency was from oil stocks and stuff like that. I think it was, first of all, it was amazing. If you look what happened, we lost 20 million barrels a day, but China's cut back 5 million. They took down their reserves. We took down our reserves. They moved 5 million barrels to the other side, to another, the Red Sea as opposed to that. It was amazing how the adjustment took place. If you would ask people before, and they didn't forecast that. But I think that's just one of the issues. I mean, there were, we've obviously had the war in Ukraine going on for a long time, trade negotiations. I think it's, and the global deficits, I look at them and I don't know when and how they might cause a problem, but I would not take that off the list. The thing is, I think is likely, at least my current hypothesis is, that the world economy is more diversified and therefore more resilient, far less reliant on energy as a component input, and that makes it more resilient. But that does not mean that there's not a tipping point. And tipping points are weird things when you see them, because you've seen them all through history, and there's always a concurrence of different types of events that cause it. It just may be, it's a lot harder to get there. You may need more straws in the camel's back to cause that tipping point. And even this current, the war starting up again, it may be that's not enough to do it.
If the president sought your advice, or if you were giving the advice, can we afford as a country to pursue military objectives in Iran for months from now? The economy can handle that?
Of course. You have to really separate the really important subject from the economy. Like the economy, with all due respect about the economy, you don't want gas prices up, you don't want unemployment and stuff like that. But Winston Churchill got you guys through 18 months when you stood alone against Hitler, all by yourselves. Could the economy withstand that? Not really. Did you guys, what do you call it, do it? You did it, with him and standing behind you. And so, this Iran, whether you like what happened with this Iran war or not, I think it's naive to act like it isn't a major, not a threat to the world. They've been killing and murdering people for 47 years. They can't have nuclear weapons. Something's got to be done. Why we allowed all this and proxy wars endlessly, and these proxy wars have been going on, and so it's a situation that needs to be resolved. I think it would take fortitude. I think a president would have to go to the American people and say, this is important, we're going to resolve it. I can resolve it without any military deaths or put 100,000 of your kids on the field and get ally support, but we are going to have this strategy, basically economic, just tighten down the economy until they say we're done. And that could happen. It may take a year and gas prices may go up, but is that a better outcome than them having a nuclear weapon in 10 years? Yeah. And I wouldn't even compare the economy to that. That one is maybe life and death for mankind. The other one is the economy.
And your security and resiliency initiative is linked to that. You want to make sure that the economy is always capable of these things.
Yeah, and that's our effort to help. Just a deep recognition that we, the Western world, and I put UK in that category in Europe, we became over-reliant on potential adversaries for things like rare earths, semiconductors, active pharmaceutical ingredients. And every nation wants to be secure and resilient. And it's a different thing for every nation. Some people don't have enough food. Some don't have enough energy. Some, Europe needs LNG, or at least most of Europe needs LNG. And so that was our effort to say, instead of talking about it, do something about it. So the Security Resilience Initiative, it's literally cutting across drones and cyber and space and AI and APIs and semiconductor. What can we do from large companies to vendors to venture capital? As you know, we rolled it out in the UK. The Western world needs to get its act together to make sure it's safe and secure. And in particularly America, America's already stretched a little bit. And then things like, you look at it, we didn't have enough productive capability to triple production of Patriot missiles. We should have planned for that. And some very basic stuff we have to, I call those policy issues, not like directly military. So, but I think for your viewership, American leadership, America having the preeminent economy, preeminent military, and the preeminent economy are probably critical for a free, safe, and democratic world. So I put this in the category of absolute necessity. It's not a maybe. It's a budget item. It's like we need to do this to stay safe.
Mm-hmm. No, I think we would agree with that, whether we're in the UK or the US. You mentioned government deficits there, and it's obviously not just a US problem at all. It's certainly a UK problem, French problem, Japanese problem. I guess, how high on the list of risks is that for you? And do you think it's a problem that we will solve calmly over 5 or 10 years before it catches up with one of those countries and goes pop?
Global deficit, debt to GDP is 100%. Ours is 100%, Europe on average is 100%. I think you guys are not quite 100%, maybe a little bit over. And your deficit is less, ours is 6%, the world's deficit is almost 5%. These are very high debt numbers and very high deficit numbers, and we're actually doing quite well. Usually you have to have like a great recession or a depression to have, or a war to have numbers like that. And so my view is it will become a problem. It's better we deal with it maturely and sit down, and we tried years ago with Paul Ryan and President Obama, but form a group, come together, acknowledge the problem, and come up with a solution. That would be the far better way to do it. The other way is to wait for it to become a problem, and my guess is that's what's going to happen. And that'll exhibit itself with, higher interest rates, the market getting rattled a little bit, people talking about constantly, remember the bond markets, the bond vigilantes, hopefully not worse than that, but it could be worse than that.
At the moment, long-dated government bonds, would you be a buyer of those?
But personally, no. I think, I know the inflation numbers were good yesterday. And again, the other thing about numbers, you dig into these numbers, really dig into them, and I wouldn't give them too much credence. They kind of have some consistency month by month, but the actual numbers themselves, I think Kevin Warsh is right to say, let's look at how all these things get calculated, and which ones react to, and how you weigh and balance them. I would not be a buyer, and part of it is interest rates, inflation. Even if inflation was 2%, the 10-year bond should probably be at 4.5 or 4 to 4.5. And the short rate should be, at 3.25 or 3.5. And they're almost there today. So I don't understand what the upside is, even if you think inflation could go to 2%. And it's been over 3% for almost 5 years. And, went up to 4 now recently because of the gas price coming down. It may very well tick down, but, being an economic historian, I can't take out of my mind what happened, after the Great Recession of '74. Deficits were less, guns and butter because the Vietnam War was over, was away. And it climbed, from 3.5% to 5% to 7% to 9% to 11%. And you could say, well, oil is a big component. There was the oil crisis of '73 and then '80. Yes, that is true. Or, unions were more powerful. All these reasons, but it didn't stop.
Let's talk about AI. I know you think really carefully about when you make an investment as a company. Do you think all of the investment we're seeing in it at the moment by corporations across America will have a positive ROI on the investments?
So look, AI, I mean, for the popular, it is real. And it's a technology which will cure cancers. Your children are going to live to 100. The afflictions we had are going to be less. It's going to invent drugs and errors in hospitals and errors in cars. And I mean, it should be great for mankind. And obviously there are downsides sometimes, like they were to airplanes and pharma. And that is a role of government to figure out how to regulate it, make sure you get the best out of it, not the worst out of it. But and then there's the job issue, which I think I think it's a legitimate issue to raise. I don't think it's a legitimate issue to get breathless over, because right now it's creating more jobs. I read today there are 8 million available AI and cyber jobs. So it's just we got to retool our training systems, and we need to do this right away anyway, which is that people can quickly get reskilled and retrained and something that's productive. There are a lot of jobs that can open up in the trades, very high paying jobs. I just mentioned AI and cyber jobs, and companies themselves are going to be doing a lot of that. When I look at AI itself, the amount of money being spent is huge. Will it in total pay off? Probably, just like the internet did. Will it pay off the way you expect and the timetable you expect? Definitely not. And remember, so we had Yahoo and Netscape and all these companies that went bankrupt, but Google made it, Facebook made it. And these are big, powerful companies. And then there are all these ancillary benefits from the internet, like your iPhones and your things like that. So yes, it is a powerful tool that will create a huge amount of value. Companies will become very disciplined in how they spend their money on it, because as you pointed out, companies will look at, okay, I put $100 million in this, but what am I getting? Like NPVs and values. And so there's that, and that will cause some of the issues out there, but what you're willing to pay for, what you're not willing to pay for, will you find cheaper ways to do it? We're already finding a lot of cheaper ways to do things today, and there are there are people writing code now that will send your queries to the cheapest and fastest depending on what you need, as opposed to, right now, when coders do it themselves, they just use the one they like, and maybe the most expensive one, and they're using it for a very simple thing.
Do you think, as you step back and look at the market as a whole, we're pricing in the perfect outcome at the moment?
I said probably not perfect, but probably a good outcome. Profits are way up. You can grow into that, even if it's high, but if you have a downturn, then obviously that's a different story.
So sort of give us a gist in the same way you did for long-dated bonds, like S&P 500 here, you would buy that?
When I do things, when it comes to equities, it's name by name. I'm not an index kind of person.
Have you bought any equities recently?
No, I have not. I mean, you said in general, my big buy at this price.
I know.
No, but if you came to me and said, that this is a great investment, I would consider doing it. So,
with the SpaceX IPO itself, obviously it's now I think today is about round. It's back to its IPO price. How directly involved? You don't do individual IPOs, but you were quite involved with this one. You had Elon on just beforehand. How much did you think about that price?
Quite a bit, but you have to understand about the price. It's not what you want or don't want. You have hundreds, thousands of very smart people, saying what they would do and how they would do it and how they value it, and you need a clearing price, and so that's much more sets the price. And this is unique because they said there's a price, which is kind of a different way to do it. But then people say, "Am I willing to buy at that price?" And you can see all the debates and all the arguments. It is an extraordinary company. That I do know for sure. I went to visit it, and Starlink is an extraordinary product and company, part of SpaceX. I've seen numbers on the data centers in space that can actually work. So some people know this actually works. There are some technical issues about getting data back here, which they would do by laser. And then the technical issue is like when the weather's bad, and you just move the laser to another part of the planet by moving it to another satellite. But if it works, it's about very cheap energy, very cheap cooling, very stable. You don't get the vibrations in space you get here, and it solves this. Where do you put the data center issue? So look, these are unbelievable things. So and Starlink has 10,000 satellites up there. The next version, V3, is going to have 100,000. And if you've used Starlink V2 version 2, it's extraordinary.
It's particularly extraordinary in the English countryside where you have no other connectivity.
That's my point.
Yeah. I had Lloyd Blankfein on the podcast a few months ago, and we were talking a lot about the financial crisis. And And he was talking about the first requirement, this was his quote, the first requirement of any business is to stay in business. You can recover from losses and live to fight another day. You can't recover from being dead. But he went on to say that in 2008, there was a 15 to 20% chance that Goldman Sachs could have gone bust, which struck me as quite a revelation in light of that quote. Looking back now, 18 years on, was there a 15 to 20% chance that JP Morgan could have gone bust?
No chance.
Zero chance.
We had far more capital and far more liquidity than most people out there. I think the way, I was always prepared for, and if you look at a lot of companies, I don't want to point out any one, their leverage ratio had gone up like this in the 7 years beforehand. The day I got to JP Morgan, which is before I became the CEO.
2004.
Oh, I was like, it's too much. I already did, we already did stress testing. And I agree with Lloyd, by the way, that you got to be prepared to live. I always said, what's the worst case? How bad can it get? If it gets there, can you handle it? By unit. And then I added it all together and said, well, if every unit came to the worst place at the same time, can you handle it? And that's, even though that would almost never happen. So I was very cautious by 2007.
Mm-hmm. I guess, you didn't just make it through the crisis. As you said, 2008, you had a positive ROE, it was a fantastic year in a relative sense. But you didn't just emerge from the crisis. You are quite comfortably now the biggest bank in the world. When you took over in 2006, you were third or fourth biggest in the US. You've grown about 8-fold since then to $900 billion market cap. The rivals that were bigger than you then have grown about 1.5 to 2 times. You're more than double your biggest rival now. Back then, were you confident you'd get the bank to where it is now?
No. No, I just.
Did you always have a personal belief? No.
No, I didn't look at it that way. I think you get in trouble if you say, oh, I want to be the biggest bank in the world. I always look at it kind of the same, which is I love, Tom Brady and Peyton Manning, they say they didn't have the best arm and they weren't good runners, but they became the best quarterback. They worked. Every day they put the shoulder pads on, every play, every practice, everything. And just so I was always better branches, better people, better systems, better this, look at the competition, build the business, build it the right way, build the right people, fix your mistakes. I mean, rapid recognition of errors is a very important risk management tool, and just continuously build. And, we weren't number one in a lot of businesses back then. Even today, we're quite critical of ourselves because when people say to me, we're number one, I say, yeah, no, you're not. Goldman's number one in that. And they're number one in that, and they're number 2 in Vietnam, and we're number 7, and at a very detailed level, when you look at those details, it's a little humbling. You're not that as good as you think sometimes, and so just constantly building. So I did not expect it. Did I have a dream one day we'd be, a star, in the World Cup? Yeah, but that was more of a dream. That wasn't even a target at the time.
Getting through those tough moments, it reminded me of, I guess, the pressure you must have felt in moments like the peak of the financial crisis. And whilst I know you have this amazing team around you that you must bounce ideas off and decide whether to do things or not, the decisions are ultimately yours to make. And if we took, say, the decision to buy Bear Stearns and take onto your balance sheet all this risk that you didn't have beforehand, as you said, you had 0 chance of going bust before that. I just wonder how lonely that is sometimes. And even you finish the due diligence for a big decision, how do you then make that final call? Are you sitting on the desk by yourself? How do you buy a company? Do you sign a piece of paper? Is that it?
You have a very good point. So first of all, we did a lot of well, I do have great teams, and we go through it like people. It's not guessing. Like we went through on that every asset, every loan, every trade. We went through their systems, their litigation, their personnel records, their. So by the time we knew we've done mergers before, consolidating, which is really hard to do, complex systems and stuff like that. So we actually went through all of that. And the price was, I say there was in this case, a huge margin of error in the price. They had 12 billion book value, we're buying it for it, ultimately became $1 billion, all of which we wrote off, by the way. So I tell people that we knew we needed that to clean up the balance sheet, basically, and merge the companies. And we had the management team who was going to run it the next day. So we were in pretty good shape. You say, okay, you're about to fight a war. Well, you got an army, you got the people, you know what you're doing. But when that last thing, when the board has voted and and you actually have to sign the piece of paper, and when you're signing that piece of paper that you've just committed the company, not just yourself, you've just committed your 50,000 people at the time to backbreak and scary work for 12 months, and that your shareholder would be under pressure, that this would create political pluses and minuses. Yeah, you're entering a maelstrom that you could have avoided. At this particular case, but that was good for the country, that JP Morgan could handle it, that we were going to get something of benefit out of it. It had a commercial plus to it. But yeah, you feel a pit in your stomach. On that one, you feel a pit in your stomach.
Massive
that
deal
is lonely too.
I bet.
You are kind of by yourself and signing that piece.
And a massive deal like that is closed by you. Do you keep the pen?
No, I don't do that.
You don't know where the pen is?
No.
I want to talk a little bit about New York and then the UK more specifically. I mean, there's lots going on in New York at the moment, around the edges, and more significantly, obviously, you've built this fantastic new building. Are you committed to New York City regardless, or are there certain things that the mayor or the governor could do that would force you to say too much?
Yeah, I wouldn't make it binary like that. I mean, I've pointed out, and I've actually told this to the mayors, that our headcount in New York has gone from 35,000 to 26,000 in the last 20 years. And in Texas, it's gone from like 11,000 to 35,000. And it's where's it attractive to do business? Why are you doing business there? Where do people want to live? So it's not just the taxes, but it is the taxes. It's the medical, it's the hospitals, it's the social life, it's the commute, it's the housing. And if a mayor wants to do a good job, they have to be thinking about all that because they have to compete. And you go way back. New York City, there weren't as many competitive cities. Now there are a lot of wonderful. I love London. It's a competitive city, so you have choices, and people are going to vote not because of their ideology, but for their family or their pocketbook or or they prefer the lifestyle, the weather, or the parks, or whatever it is. And so, if governments do the wrong thing, it will work adversely. You see that happening in state after state, and you see the adverse effects in places like Texas. They're open to business, they have low tax rates, low individual tax rates, and that's and great universities, graduating great kids, easy for you to buy a house and have a family. Those things matter because not just you, it's what your people want, what the options are. And so.
And on the UK, what's your message to the new Prime Minister, Andy Burnham?
I don't know him. I would say the same thing. If I want him to succeed, I want to see the UK thrive. I want London to succeed. I'd like London to be a home for a long period of time. It's been a wonderful home for us. But the UK, like everybody else, and like my own country, so don't yell at me and tell me I'm an angry American. If we don't do the right things, around immigration and taxation and regulation and healthcare and affordability. Affordability is not a Democrat or Republican issue, or taking care of our lower paid citizens. You need a strong economy to do that. A strong economy will benefit all of your citizens. And just travel around the world and look what happens when bad policies muck up a country. So, the new chances are going to be good policies that actually cause growth. And good policies are free, and growth is the best antidote. Growth also helps the lowest paid people the most. Sometimes you look like you're doing a policy that's in benefit of a big company or wealthy people, but it's growth which will drive it for everybody. And it also creates the wealth of the nation that they can use to fix schools and roads and hospitals and all of that. So, I'm praying that they get policy right. And government after government get it wrong. And look at Europe would be a primary example that they've been slowly slipping on most measures of economic competitiveness, and it's a bad idea. Mm-hmm. And it's not, and that is not helping the lower paid people, which is people on the left and the right say.
One tax that's talked about a lot is the banks levy. It's a 3% extra corporate tax that other sectors don't have to pay.
There's two different taxes we have there extra, yes.
And it used to be 8%. Rishi Sunak brought it down to 3%. What if that went back up again?
It would be one more negative on that bucket of things you got to think about. I always thought it was wrong. JP Morgan did not damage the UK, and I called the chancellor at the time. Did not damage the UK. We're a great citizen there. We hire people there. We want to be bigger there. We train people there. We hire veterans there. We have programs for people. We have medical. All of our people get medical and all this stuff like that. And I just thought it was lack principle to punish a company. It had nothing to do with the crisis. Didn't cause the crisis, and it's still there. 17 years later. Is that fair to a shareholder? I mean, it may sound great, tax the banks, but it's $5 billion that my shareholders paid on that extra tax. And I just think things like that have adverse consequences. So if a government decides to do it, there's nothing I can do, but it will over time cause decisions made that they may not like.
The new Canary Wharf building you announced the day after Rachel Reeves' last budget when she didn't put that up. Would you U-turn on that building?
But it's a binary decision. I don't know what I do. I wouldn't make a binary decision like that. I thought Rachel did a great job, by the way. I want London to be our happy home for a long time. I would be very cautious if I was a government thinking that penalizing any company, out of the ordinary is a good thing for that country. And what they should have, in my view, is a competitive tax system that's consistent and conducive to capital formation that'll drive a country, drive the growth of a country. That is what they should do. If you have an uncompetitive tax system, capital leaves your country. And if capital leaves your country, it goes to other countries, and you see that. And now you see, what is it? How many companies have delisted from London in the last couple of years?
Another one bought out yesterday as well. A lot.
I wouldn't want to see that if I was running a country.
Hi guys, it's Wilf. I hope you're enjoying this episode. Just a quick reminder to please hit follow or subscribe on your podcast or video app so that you never miss an episode. And if you've got time, please do give us a 5-star rating and leave us a comment. It really helps other people find the podcast too. Now, back to the episode.
Wanted to move on and talk about bureaucracy. You've talked about how bad it was when you joined American Express with Sandy Weil, and how you had to
You remember that?
I've read and listened to pretty much everything you've done in the last couple of years, so I've gone back over it all. And you now have 320,000 employees, more than you had then. So just compare and contrast what you found when you got there and how you avoid it today with a massive company to try and make sure it's not, sprouting up anywhere.
Well, first of all, it does start at the top. Not always, but it does start at the top. So I always say bureaucracy, and people know bureaucracy, they see it. You can see it in how you fill out forms and taxes and Department of Motor Vehicle and getting a certificate of occupancy for your house. And people hate it. It's like demoralized. But I always tell people that the scourge of any company, big or small, it's not unique to big companies, maybe more unique is bureaucracy, complacency, and its cousin, arrogance, which is, well, of course you're doing well and that you can do well forever. But that's not true. You can run a great restaurant. You have to do great service, great food every night. And we're in the same boat. We have to compete every day. And so the way you combat it is you're always an honest assessment of yourself, not yourself as a person, but your products and services. You read customer complaints. You go to the call centers. You talk to your people all the time. You're always finding out. You're constantly assessing what's taking place out there, and you're relentless about it. And you try to get you try to teach your own team to do the same thing. That's why we have bus trips and road trips, and it's not to show the flag. I want to hear. I always say we have these tellers and branch managers come on the bus. We give them beer and immunity. Say whatever you want. And I watch this sometimes where they tell me, Jamie, you really want that? And they're like, why we do this? I remember the first time we did faxes for some product, and they're just dumb things, and people accept them. And I'm like, that's terrible. We'll fix it for you. I have seen people in my own management teams who were twisting in their chairs. They don't want to hear from someone layers down who reports to them how bad it is. And that tells me something about the manager too, that they probably shouldn't have that kind of job or even have the job if they can't acknowledge it, because you don't know. And then directly related to being is curiosity, always learning, always looking at competition, not so you can compete. Acknowledge where you made mistakes, the good, the bad, the ugly. There are a lot of things that our competitors did that we could have done, like Stripe, and we simply didn't. We missed it. And I don't say that to flagellate myself or somebody else. I say it to be an honest assessment about, well, yeah, we may have the biggest payment system in the world, but we missed that thing, and that thing is really big and really important. And why? And you learn from why. You learn from your mistakes, and so you have a little heart and humility. David Novak, who I think recognize people, and I didn't always understand that recognizing people is a form of humility and a form of curiosity, because it's saying, hey, well, you did a great job. We're going to recognize the job you did. It's also saying it wasn't me, it wasn't that person, it was you, and then you recognize it.
We have those anonymous ways to give feedback at Sky, but you have to fill them online, and I always get nervous that, is it totally anonymous? But I'm pretty blunt in those, so I hope they're anonymous.
I've always had that problem, and also when I turn you have to get a response. I remember the first time I turned on Bank One, it was so overwhelmed. I closed it down with an apology. I'm sorry. And then we started to open it up by state, just so we can handle it, because it's disrespectful to say, give me your input, and then never get back to the person what that input might actually be. And so, I mean, what you learn from it.
It's funny you mentioned.
But I still do that, where I'd ask them when I leave a lunch, they mention 8 things, and we're going to follow up on every single 8.
And you're also, for someone in your position, you're very efficient at replying to your emails, which I find amazing, actually, given how busy you must be. I've heard you talk, when we talk more broadly about leadership, about the importance of character many, many times across our interviews and just publicly. And I had always sort of assumed in my mind, that's a Jamie Dimon thing. He puts character right at the top of his list when he's trying to judge people. But I was recently reading your friend as well, Andrew Ross Sorkin's new book, 1929, and I hadn't realized that it was also something that your founder does, John Pierpont Morgan, that he put character above all else.
And this above all else is character.
Yeah. And is that something, therefore, that you adopted having studied J.P. Morgan, or is it coincidence? Did it influence
It's coincidence. But I think a lot of people would say that's the highest thing. Now, you have to be honest what you mean by that, because people, a lot of these things, people say the word, but they don't act on the word. They put assholes in jobs, but they say it's all about character. And you learn more as you get on, like what it means. Like, would you promote someone to a big job that you wouldn't have your child report to? That tells you something about, would you want to report to them? And it tells you like how actually you're making those decisions, if they're the best salesperson or something like that. And so, no, but I brought back the Pierpont thing. So when I came, I saw that somewhere. I said, put that back. That's a big thing, So we now use it as a key point. And it's also, it's really important in banking because, in some ways we're like a financial partner. I mean, it's not like you're just buying a piece of steel. We have to know, how will you act in tough times? What kind of person are you? How do you treat your employees? All these little things that you wouldn't normally put on a credit form, but they're different forms of credit. Do you want to be a part of that person? Do you want to play in a team with them? I love team sports because you see when team sports, when they are humming, man, you see them working together. Mm-hmm. That's the form of character. They may not even like each other, as opposed to another team where they hate each other and you can see that they won't pass the ball. And so all these different forms of how you analyze these things.
You mentioned David Novak there, and I was listening to your appearance on his podcast a few years ago, and you were talking about, he was asking you, given all the success that we've touched on, like how do you make sure you don't get a big head? And I was really struck because almost counterintuitively, you felt insecurity in CEOs is often what leads to them having a big head or the appearance of a big head.
That's correct.
So expand on that for me a bit. What do you mean by that?
There's a great quote from John Weinberger in Goldman Sachs, who said when some people get a big job, some grow into it and some swell into it. And what I've seen is that, what happens, the bigger job you get, the less you know, literally about the job. So make believe you're in the trading area and you run mortgages, you're the best mortgage guy in the world. You know more about mortgages than anybody else. I have to call you up to find out about what's going on today in mortgages and stuff like that. Maybe that mortgage guy gets promoted to run trading. Now he's got equities, commodities, fixed income, Asia, and all of a sudden he's an expert in mortgages, but not in the other ones. And then make believe you get the next job up. Now you've got 36 functions reporting to you. You're an expert in one, and you kind of learn 5. Mm-hmm. But all the others are foreign to you, and there are different people running these things. So it induces insecurity. And what happens, and I've just noticed this with people, like some people when they get there, they have these innate skills to trust people, to get the best out of people, to not get embarrassed by not knowing, by having fun, by being curious and saying, God, just do that again and let me know if I can help you with it, as opposed to, and then the people, when they have insecurities, they tend to be like friends, friends of Bob. And, he doesn't like that. It becomes PowerPoints, make them look good. Don't tell them the bad news. And that is what causes the problem. And you get that in governments too, with government leaders where, they're surrounded by people telling them what they want to hear because of insecurity. Whereas a secure person, you're not going to hurt my feelings by telling me we have a crappy product. I would probably say, well, thank you. I'm going to go look, because if you're right, I'm going to thank you for letting me know. Like I say, customer complaints are a gift. And when a customer complains, people often say they're right or wrong. I say, no, look for where they might be partially right, Because very often there's an element of truth that we should actually do something about, even though in general it may not be right. So I do think insecurity becomes one of those things, and then you see the response to it is kind of covering up, friends, don't embarrass them. Reports start being modified to look good as opposed to undress what's going on in your company. How are you performing with your CSAT score, with your approval rates, with your, all the stuff that a customer sees, it starts to disappear. And
Are we seeing some of that in the White House at the moment? Don't tell them it's not good.
I'm not. I can't comment on that. I'm not in the White House, so I don't. And look, there's some very capable people I know there, and so you have to be in the room to find out what people are actually doing. So, but I think any leader should be worried about it.
Yeah,
it's just an ordinary course.
I know we don't know, and there's a lot of things that get exaggerated, but we do sometimes get to see inside the White House. So sometimes we have those cabinet meetings that are recorded. I mean, be frank with us. If your board meetings were like that, where everyone just said, Jamie, you're so fantastic. We love the job you're doing. You're the greatest CEO of all time. Would that be a good thing to have?
I wouldn't mind having it every now and then. No, I definitely do not have that. We definitely do not do that.
So it's not ideal. It's not ideal around the cabinet table.
For me, it's not ideal. I'm not commenting on the White House. For me, it's not ideal, and I'm much more the good, the bad, the ugly. Just trying to do the best job type thing. My board does something unique, by the way, which is every single board meeting I leave, and they meet without me for 20 years now. And I insisted upon them to. It wasn't legal, it wasn't regulatory. I said because, and then when there are disagreements with people, I say, okay, Wilf, I tell board, we're about to make a decision, and Wilf just has a different point of view, and I want you to hear it directly. Because again, I'm just trying to do the right thing. I'm not trying to do the thing that I want to do. I want to do the right thing for the company, their clients, or the products or services. So
there's another thing just to follow up on this theme. You said this at Ohio State University commencement speech in 2021. You said, we all stand on the shoulders of those who came before us. Humility is the realization that those who came before paved the way. Never fool yourself into thinking that your success is just your own. We just had the 250th. Do you think that was enough on display? That respect for the 249 years beforehand?
It's hard for me to say. I do think it's absolutely right that we should have shown it. I think a lot of things did. So if you were here, there were documentaries, there were things on TV. There's a lot about Jefferson and Washington and Lincoln and Hamilton, and so I think there was some. Was it enough? Is a very good question. I think in general in America there's not enough. We have our Constitution, which is a legal document, but what's really important is it's the embodiment of values and principles that are more important: life, liberty, and the pursuit of happiness. And some of these are British concepts, and the pursuit of happiness was not happiness the way they mean it in today's generation. It was pursuit of something meaningful, purposeful to you. It could be agriculture, it could be media, it could be education, it could be finance, something like that. But then all the other principles, freedom of speech and freedom of religion, freedom of enterprise, to do what you want, individualism, rugged individualism, work ethic, civic responsibility. So if you read the Founding Fathers, that was all of it. We definitely do not teach enough of that anymore. And we definitely don't teach enough that those values are why billions of people would like to come to this country. Mm-hmm. Does that mean the country was perfect in its founding day? Of course not. I mean, do we spend a lot of time now talking about, I heard one of our politicians talking about, the country was founded on exploitation. I mean, that's absurd. The person obviously doesn't understand anything, but did we treat the black community right? No. Should we acknowledge that and do something about it? Yes. But it doesn't mean that those principles were bad and that we shouldn't support it. And so we're still the bastion of freedom in the world. And so I think we should support that, tell people that, educate people about that, and those other responsibilities are real. Like, I think it's real for a business to get involved in making society better. I think it's a mistake for us to blindly look at the bottom 20% and act like we can't do anything to help. Didn't cause it. I don't like it when people act like, sometimes J.P. Morgan caused bad inner city schools. Really? That just is not accurate. But can we help fix them? Absolutely we can.
On the flip side, in terms of respecting politicians, you at the peak of the financial crisis, you sent Hank Paulson, former rival of yours, Goldman Sachs CEO, then had become Treasury Secretary. He was under a lot of stick at the time, and you sent him the Teddy Roosevelt quote. It's not the critic that counts, not the man who points out how the strong man stumbles. The credit belongs to the man who's actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, and if he fails, at least he fails while daring greatly. With that in mind, do you have great sympathy for politicians?
Yeah. So, yeah, I do. You know, I both come mad at them and have sympathy. You know, when we rolled out security resiliency in London, you know what I said to the whole crowd, to all Brits in the room? I said, we owe you all a great debt of gratitude for standing alone with 40,000 dead in the Battle of Britain, saving the world from that scourge of Nazism for a year and a half by yourselves. And that is a debt of gratitude. I think politics is a very tough game. And I think those who do it well and try to do it well, and I was with David McCormick yesterday in Philadelphia, rolling out some of these programs. The President Trump was there. That's maybe we thought I was going to see the president. And I greatly value the people who do that. I love the fact he talks to his senator, Fetterman, the other senator from Pennsylvania over the time. And I think if you look at, when I come here, I always remind myself, there are a lot of people who want to do the right thing, who care about their country. They may disagree with you, by the way, some may be more that, but I don't disrespect someone who's got a different point of view about what might work out there. But that doesn't mean you shouldn't get mad at the hypocrites, the liars, the bums, you know, the self-serving, and there's plenty of that too. And if you read history books, there was plenty of that in the original Congress. You know, it wasn't just our Congress that has that. So
you've obviously thought about politics at times. Is it a problem that someone like you has ultimately never decided to do it? I guess the link to this question is, how do you look at, you meet with them all the time. What's the caliber of G7 leaders today compared to, you mentioned World War II there, you know, the likes of Churchill?
Yeah, well, I can't compare them directly, but first of all, you're making a point. I think business leaders should get involved in trying to improve their countries and their societies because they have the know-how, the knowledge, the capability. It kind of transcends a little bit just their commercial enterprise. But I also remind people that, you know, JP Morgan is not going to be a lot better than our country. So if our country does really badly because we get all these policies wrong, which we are getting wrong all the time now, education policies, certain tax policies, you know, certain immigration policies and all that if society does badly, it's bad for all of us in a million different ways. And so a lot of these government people, they want to do a good job and they need help. And that's not an insult to them. They don't have the staff. The world is very complex. They often don't have the technology or the research capability or things like that. So when they have good faith, I want to do a good job with them. And so, look, I think, you know, I've met a lot of leaders in the world, and it's, you know, hard to measure a leader when you have, you know, 45-minute conversation with them. But some are quite exceptional. I mean, Macron is exceptional, very smart, very dedicated, very knowledgeable, got a lot of great things done. I know his polling. You know, I know that that's bad. People say, yeah, but that's a poll. And, you know, I think Starmer is quite bright, you know, and I'm hoping, you know, that these European leaders get together to form a coalition of the willing to start to make the changes that Europe needs to make. And I also think the business community can be a lot more organized in Europe. That you need a British roundtable, business roundtable, a stronger European round that takes positions that aid and abet the growth of their countries, or EU in this case, for the benefit of the people of those countries, not for their own tax benefits. You know, and so, like, I'll give you one. The capital markets union, the savings union, you know, it may sound boring to some of the population. That could incent growth. And if you had it, it actually would be bad for JP Morgan because they'll be better competitors. But I know it's better for Europe. I'm in favor of doing what's better for Europe. That was better for JP Morgan. And it'll make them better, tougher competitors in the United States, but so be it. I mean, and too often business uses the regulatory, legal stuff to actually block competitors. That's a bad idea too.
In many of our conversations, we've talked about, you know, what might happen if you wanted to go into politics, and you've kind of ruled it out more clearly now. Do you ever pause to think about the value you personally add to JP Morgan Chase? I mean, clearly, as we've already reflected on, you're not the founder, but do you accept that you have a founder-like effect on the company's performance, on the company's share price? You're not JP Morgan himself, but you are Mr. JPM Chase.
I try to do the best I can. Yes, every now and then I get called JP Dimon. But look, I'm not a founder, but yes, this is an unbelievable company. I'm proud to be here. Whenever I travel the world, I remind people we bank cities, schools, states, hospitals. I'm really proud. And we try to do the best wherever we can. We're respected in most places. And that's a hell of a thing. And then I think this company also has great impact, positive impact on society. Through our skills effort and our hiring veterans efforts and our SRI effort. And then we do much more, than people don't see around, policies in states and things like that. So
if you left,
one day I would be gone, right?
But if you left the company, what would it do to the share price? 10% down on the day, 20% down?
No, I don't think so. I think it'll be different by the time unless I'm hit by a bus, but I think by the time it'll be, probably organized, thoughtful, not a surprising event for people. So
what aspect of the way you run the bank do you think will be hard to emulate? I mean, presumably you would accept that whoever succeeds you has to do it their way. They can't
of course,
try and copy you.
They can't. We're all different, and look, I would. That's why I say, someone asked me recently about that. They said, what are you looking for? Like what strains, like technology or AI? And I just think that's a false thing to look at. I think what you want is someone who's got work ethic, openness, curiosity, earns the trust of people, can really work hard, can have empathy at a deep level in many different ways, enough IQ to make sure the detail analysis is done. They don't even have to do it, make sure it's done. So they have to be kind of disciplined, like a little bit of a military discipline, otherwise it doesn't work. But then those, the heart. I mean, do you actually take care of people? Do they see you actually do it? I fire customers who've treated our people really badly. I will not put up with that. And that, once you do something like that, filters through the company. We pay our lower paid people more to make up for their medical insurance. And we've hired 14,000 vets. We try to be good citizens in every community we do business in. And so I want people got the heart, curiosity, grit. Like you better have a little grit and a little bit of courage, and you better be able to say no. Like because people say to me, you got to decide by the end of the day. I say, well, that's simple then. The answer is no. I'm not going to be put in a position where I have to make a stupid decision quickly. And so, we have a lot of people who have this wide bucket of skills, and obviously their bucket will be different, how they execute them will be different, but they have the skills.
Is your successor definitely going to be Troy or Doug, or could it still be Jen?
Well, I wouldn't say, Troy and Doug, obviously I've been put in a position where they're likely successors, hit by the bus type of thing. There could be somebody else there. Jen has made it clear that that's her preference. So, and that's the other thing about the job. I tell people sometimes the closer you get to it, the less they want it. Right?
I wanted to rewind the clock, if I could, to the 5th of March 2020. I remember reporting on this day when it crossed. You nearly died. You suffered a very nearly fatal heart failure, but received sudden open heart surgery. Did your life flash before your eyes at that moment? Was it that close? Did you look back at JP Morgan Chase and what you built?
Yeah, just so you know, that wasn't nearly as painful as the thing I went through earlier, where your life slowly flashes through, which is throat cancer and all the associated radiation and chemo that knocks the hell out of you. No, first I knew what it was, an aortic dissection. I knew that a lot of people don't even make it to the hospital, and I knew a lot of people get to the emergency room, don't make it out of the emergency room. So I knew at that point in time that, there might be goodbye, yeah.
And what stood out for you in the life that you'd led in that moment?
I remember I spoke to my wife, and I told her to call their company and tell them exactly what's happening so they can do what they got to do. But the good news is I didn't have any great regrets. I would be leaving behind great children, great wife, a great company. I did the best I can. Of course, I made mistakes. I didn't think of that movie Defending Your Life, like when they show you your stupidest mistakes on the screen. But fortunately, I recovered from all of that. So,
absolutely. I guess on the topic though of family, I mean, your job is relentlessly demanding. How hard is it to balance family life at the same time?
I am also relentlessly organized. I mean, people would be surprised. Like I return every phone call every day. My office is magnificent. They know all you, so half of that isn't me. It's like they're just responding. You want to know if you want to come in town? We do this. I go to Joe. They respond. So they take care of a lot of stuff like that. and my calendar is, I basically do work and personal life. So I don't golf. I don't go to red carpets. I don't go to a lot of black ties. I don't go to, I often meet the family for dinner on a Friday night, all of them, like the whole gang of them. We have a house in Bedford. We all go up there and basically barbecue or hike or swim or something like that. And so, and we still do. We still take our family vacations. And so the kids, I used to tell them, like, I did travel a lot. They were like, you never traveled. Because they remember that I was devoted to them on most weekends, even though I was gone some, and we had a lot of family dinners. They said a lot more than most people, even though I was gone a lot. But I was home, I was like, okay, I'm coming home. We're going out to dinner, bring your friends. And when they're younger, they bitch and moan and complain, but they love doing it. We still do it. And that's the best part of life. My daughter, one of them said, Dad, you need another hobby. You need hobbies. I said, what do you mean? I said, and I'm not like into fast cars per se, but I said, I have hobbies. I have you. We eat together, we hike together, we travel together. I love history, I love wine, I love music. I used to love tennis. I can't play anymore because of my back, but I said, those are my hobbies. And I'm perfectly content with those. I'm not looking for other stuff.
I've always heard you talk so warmly and fondly about your wife and your kids. And I did want to pick up on this because I didn't know this beforehand. But your dad would rip out pages of annual reports of companies and hand it over to you and say, value this business, what would you pay for it? I didn't know that. So that's one of the ways you got into this.
No, my dad was a stockbroker, so I was of the three boys. He didn't push anyone that way. My older brother was a physicist, a real class physicist. He was at Niels Bohr Institute for years, and my twin brother's an educator. So it wasn't anything, but I was interested. I read the papers. I read Graham and Dodd in high school. I was a nerd. I read all of Freud's books in high school. I mean, I just always would like taking this stuff in. But this is a great exercise. You can still do this exercise, and I would still be humbled by it, which is back then annual reports were smaller. They were 40 pages, 30 pages long. But there's always that part where it told you the price of stock was. And he would give me an industry you might know something about, like a restaurant or something, and say, okay, look at this, look at the history, read the annual report, study the industry if you want. What would you pay for the stock?
It's hard.
It's brutally hard, and then you learn also the why, like the accounting's bad or the people are bad, or there are other reasons people will not pay, but you think, oh, it's worth 13 times earnings, and the market has it at 7 or 25, and so it's humbling.
It's one of the many reasons I only did finance for 5 years and switched to media. I just have to comment on it now. I don't have to come up with the answer each time. Jamie, we're basically out of time, so I just want to end with a question that we ask all our guests, which is an overriding piece of advice for our listeners. Often it's investment advice, but for you, perhaps better to ask, the overriding piece of career advice for our listeners who are ambitious and hungry to do well.
Oh yeah, I'll do the best I can. I mean, look, they're the basics, like work hard, but the ones that people miss a little bit, learn. You can only learn 2 ways: by reading. So read a lot, and read, labor and conservative. Read Democrat and Republican. Read George Will and David Brooks and Tom Friedman. Don't get buttonholed in your brain like to one thing. Read a lot of history. History itself teaches you a lot about what can go right, what can go wrong, what people do in tough times, like Lincoln or Nelson Mandela. How people misbehave in good times. I mean, you read Andrew Ross Sorkin's books. They're echoes of arrogance and leverage and greed, and you do actually learn from that. And you can learn from other people's mistakes, which is a better way to learn than making the same mistake. And then you learn with people, and that's a better one and a harder one. Who are they? Like, don't have a natural. People are different than you. They are smart a different way. They're verbal. They're. I mean, there's one guy pointed out to me, he worked at a bank 1 year ago, and he said, the guy, he was a sales guy in one of our trading desks, and he said, that's one of the most decorated living American soldiers. I didn't know, and you learn all the time about it. And on a bus, ask people about their past, their histories, you'd be shocked. But if they trust you and they open up to you and develop your EQs. EQ is, which you have in media, but do you have empathy? Do you understand when someone's hurting? Do you put your hand, some people and have a bad day trading, the boss puts his hand on it, he's like, get out of here. The other boss might put his hand on it and say, it's okay. It happens to everybody. Go home and have a drink. And so, Are you good at communicating? Like, Jeff Bezos has people write those 6-page memos. A lot of people are sloppy as hell when it comes to communicating. They'd rather just pontificate than say, I have 3 things I want to describe you, A, B, and C, or 3 options, and here's how I weigh the options, here's why I'd pick B and not C. And then you can have a conversation about it. And so, and that's a discipline, by the way. Have some kind of discipline. Oh, and a very important one, you have to take care of your mind, your body, your spirit, your soul, your friends, and your family. You should look at that as not a formal job, but as part of what you should do. And a lot of people, all of us. I made a lot of these mistakes. So this isn't saying I didn't make them, but hopefully you learn when you make them. Is that but a lot of people, when they start their early careers, they're under a lot of pressure. Early career, they got married, they got kids, and they start neglecting pieces. And sometimes, like I tell some when I was younger, and we all had young kids, and some of the fathers would complain, but they didn't have enough time for the kids. I said, but you go play golf every Saturday and Sunday. Stop playing golf. Stop watching 3 football games the weekends. Learn how to do what you should do. Like take a kid to play tennis and have something you do with them that's just between the 2 of you or something.